Since September last year, the Bombay Stock Exchange is down about 15%, the Nifty 50 down about 16%. And if we go across sectors, the public sector stocks are down about 45% from their high, oil and gas down about 43%, real estate down about 45%, auto as a sector, Nifty auto down about 35%, FMCG 31%, and it goes on. There's red everywhere in the markets, and people just holding their hair and wondering, what in the world should I do? When does this bleeding stop, and when will the recovery start? Nobody, frankly, has the precise answer, but I am delighted and privileged to introduce our special panel for this India Today News Track recording. We have Samir Arora. Samir runs Helios, one of the top performing funds. We've also got Shankar Sharma, founder of First Global, one of India's best known investors. We've got Nilesh Shah, managing director at Kotak Mahindra Asset Management Company, someone who investors and the government listens to very, very carefully. So thank you, gentlemen, for taking out time and for joining us here. It is an absolute pleasure to have you with us, because everyone's wondering, ab kya hoga mere portfolio ka? Where do things go next? So let me start by putting that question to Samir Arora first, because when people wake up day after day, they look at how their stock portfolios are doing, they get very worried. And the first question they have for you, Samir, is, how long does this continue? When will this bleeding end?
So the bleeding may end soon. I think soon, by soon also I mean 1 or 2 months. But then the repair of confidence and of foreigner and domestic confidence might take another 3-4 months. So if we can get away in 2025 by recovering some of what we have lost this year, that would be good. But generally, you have to look at it a little bit wider lens, which is to say that when Indian, or not Indian, just stock markets, when they outperform fixed income or debt markets by, say, 5-6% per annum, the only reason why they are able to do that is because it does not happen evenly. So over a cycle, which is broadly 7-8 year, 5-7 year, depending on cycle, normally in the end, equity markets do better. And this is true across markets, across years, across cycles. This is part and parcel of the game. And when it comes, it is very painful. But if you little bit look at it with a wider lens, it looks part and parcel of a normal way that these markets work. You need some excuse. In our case, the excuse was high valuations for small and mid-cap stocks. Sometimes it could have been no excuse also, and then you will find some excuses. And that is how it happens.
Shankar Sharma, Samir thinks it will take at least a month or two before the market finds its bottom. From your lens, have we reached the bottom? How far is the bottom from here? How much more bleeding do you expect before the bleeding stops?
So there are two things here. And of course, Samir has given 1-2 months as the target. I mean, I think if you ask him, put a gun to his head, I think he might be a little bit more conservative than that. And I think, because obviously he's on television, he doesn't want to say things which might be a little bit problematic. And the problematic part is 1-2 months may not be enough for this damage to heal. And each time such a damage happens, it has happened. We've seen it in the past in 2000, 2008. COVID was different. That was a specific event and a very different kind of a shock to the system. The shock got eliminated because of rate cuts and the market rebounded. But this kind of I can call it correction, bear market, is not an easy period to navigate for people, because prices can fall sharply, they can rebound, they will rebound. I mean, it's fallen a lot. And the problem then happens, then people start to believe that it's over. But such kind of problematic situations don't get over in a month, 2 months, even 6 months time. It can be a longer period. And for this group of investors, set of investors, last 3-4 years, and they were told that markets are not cyclical by the wealth managers or whoever was advising them. The fact is markets are cyclical. They are 100% cyclical. And this is their first exposure to cyclicality. But the cycles are not short-lived. They take longer to form, they take longer to peak, and then they take a little bit less to correct. But not like, what happened in COVID. It might take a few months, even a year, maybe a year and a half, maybe 2 years to heal, get the let's say the pain out of the system, get the numbers adjusted to the markets, because markets were probably factoring in growth in corporate earnings, which was very high. Maybe we're not getting that. I mean, all the downgrades are telling us the market numbers are too optimistic. All of that will take time. It will be a more protracted period of adjustment, and not like COVID. People should not mistake it for a COVID kind of situation, which was an completely out of the blue black swan event, and it got solved relatively quickly. This is probably a slower burn.
Okay.
So yes, it is going to be painful, but then it's part and parcel, as Samir said. I mean, I see no reason why these people should not suffer what we have suffered in 30 years. We have been through many such events. Let them also have one of their own.
So Samir said 1 or 2 months. Shankar Sharma saying 1 or 2 years. He's also accusing Samir of saying stuff on TV, which is conservative just because you want to keep your big social media army happy. So you are telling them things which you wouldn't be telling them off TV.
May I say one thing? The question was different, and Shankar has answered it differently. The question is, when will the bottom come? I said the healing will take, or the recovery will take 6-9 months. I'm saying bottom at the pace at which it is happening, and why I said 1 or 2 months. We want to see what happens in US in terms of tariff and all, and also in April we'll see the sector that I'm most worried about, which is IT, as to how they deal with not just the uncertainty in US, but also the AI attack. So I'm not saying bottom today and back in action in 1 month.
Okay. Nilesh Shah, we've heard two different perspectives about how deep the wounds will bleed before the bleeding stop. What's your sense of how long should investors really brace for these turbulent and choppy weathers?
I think investors should brace for choppy weather throughout their lifetime. कोई वार्निंग लेके तो मार्केट गिरने वाला नहीं है, और कोई आगाही करके तो मार्केट चढ़ने वाला नहीं है. If you are an investor, you have to be ready for volatility, and which is why we have always told people, be a long-term investor. In the short-term market is like a voting machine, flows will drive. In the long-term market is like a weighing machine, fundamentals will drive. Right now, market is driven by FPI selling. They have made it clear they are selling. They have made it clear they are willing to sell at lower prices. Not like crazily lower prices like COVID, but certainly at lower prices like today. The large caps are already below historical average valuation. So to some extent, they are in fair value. But if someone is willing to sell at lower and lower prices, market doesn't give easy exit. So I will summarize, in today's flow-driven market, as long as FPIs are selling, markets will continue to correct. Moment their selling stops, markets will bottom out. And thereafter, depending upon our fundamentals, as Shankar mentioned, markets will find its own way up.
Interesting. So you're also mentioning, and I want to show this through data, if we compare how foreign investors have been selling month after month, and I've got data going back to October, every month foreign investors have been selling, and it is domestic institutional investors who've been buying. And the question really is, and Samir is usually based out of Singapore, and therefore the question really is, when you speak to these foreign institutional investors at this moment, what is the outlook that you pick up about the Indian markets? Are they continuing to be negative, or are they now beginning to find good valuations where they think that they can come in and step in and make purchases?
Well, first is in our own, because we are also FPI, both on because we have only once a month outflow, both on Jan 31st and Feb 28th, we've got inflows. Small, but for our size, maybe 5-6% of our AUM. So the thing is, therefore, not everybody is a seller. And I think this has got mostly triggered, because you see what happens is, once this cycle starts, that market is falling, then somebody on the margin panics and says, I'm also selling. And it started in October. Actually, September was 5-6 billion plus. And the whole of last year, if you count primary plus secondary, it was only $1.5 billion net selling. So real selling has happened. The surprise selling has happened in Jan and Feb. October last year, you could have justified by saying it is preempting Trump's victory and, whatever may happen in the US market. And these 2 months, some of it could be because of slowdown and because then China started doing well. But these things cannot last at this pace. Currently, already the FII selling is about 0.5% of market cap. And the average for the last, 15-20 years, I saw in a Goldman report, is some 0.3% of market cap. And in the worst of times, which is COVID, it was 0.7. Right now, I think more than percentage and all, just look at it as time, that the pace at which these things are falling, and particularly in India, it cannot go on for more than a month here or there. Although you might lose 5-6%, or I hope not, but at the index level and maybe therefore 10% at some stocks level, you are in the end time period. But the problem is the recovery. Normally, a very sharp V recovery will happen if there is some government intervention. Even in the US, if they would print money, not now, I'm saying in the past when these things have happened. So, if you want a fast recovery, something external has to happen.
What can that government intervention be? Because this show, this broadcast is watched widely. I see you've been pushing for a change in capital gains taxes. What do you think this change can
I have
be?
not been pushing. I've been highlighting that it is a wrong step. I am too small an FII to randomly represent other FIIs who will benefit of my hard lobbying in the press or on social media. It is just as a friend of the government or of India. I think it is completely wrong to be so isolated on a point. And then public says to me on Twitter and otherwise to each other, oh, these FIs did not say this when the markets were doing well. Precisely. If the markets are doing so well, they will ignore any extra cost. But normally markets don't do that well, that you are making 20% pre-tax and therefore you are delighted to give tax. The point is we are standing out. But I am only highlighting.
No, so explain. What specifically are you hoping for and why do you think that might work?
No, I'm not hoping. I have just said it. Quickly this time I can tell you a quick joke that there was an oil man who went to heaven and he found that the heaven was full. So he said oil found in hell. And everybody ran towards hell, and then he also followed, saying maybe there is truth to this rumor. I don't want to, on my own creation, say this is happening. I am just saying it is wrong. Somebody should look at it. That's
okay. Shankar Sharma, what do you think is the current outlook at this moment of foreign investors? From what I gather from Samir, he's saying that at some point in time this needs to end because the bleeding by foreign investors, the selling cannot continue in this fashion for very long. At some point in time, the recovery will start as far as foreign investors are concerned. From all the foreign investors that you speak to and what you understand of their investing propensity at this time, how long do you think their negative outlook towards the Indian markets and Indian stocks will continue?
No, I want to stay with what Samir, has been talking about on social media, which has been very widely circulated. The fact of the matter is that there is no way, no matter how hard we shout, how hard industry shouts, that the government can roll back the capital gains taxes and the increases thereof. It's not possible. And I'll tell you a very simple reason. In fact, a couple of hours back, Samir and I were chatting on WhatsApp. We were trying to reconcile the capital gains numbers. There is it's not a precise number, but let's work with whatever was the number in 2023, FY, was around 1 lakh crores from long-term capital gains. We don't know short-term capital gains. Let's say it was 50% or something like that. So 1,50,000 crores. And then, of course, there's STT, which back then must have been 30,000-40,000 crores. Now, fast forward to FY 24 and 25. Looking at the market the way they have done in the last couple of years, barring the last 3 months, I think this number might have doubled. So we might be looking at a capital gains number composite for long-term, short-term of maybe 3 lakh crores. And then STT maybe 70,000-80,000 crores. You're talking a very substantial number now in your fiscal situation in the overall pie chart of revenue coming from stock markets. This has never happened before. This is I'm calling it the stock marketification of our national fisc. That is a serious concern area and should be one for any economist or any market participant, that earlier we had predictable sources of taxes on the personal, on the corporate tax, on the direct taxation, which was corporate tax and personal income tax. Now you've reduced both of them. 19 May you reduced the corporate tax, and this time you reduce the personal tax. But that slack has been taken up by stock market profits. You have an unpredictable source of taxation now dominating your growth in personal income taxes versus a more predictable couple of sources, corporate income, and personal income tax. How sensible is that kind of taxation policy when you're betting on a continuation of a bull market, irrespective of whatever happens in the world of equities, irrespective of market cycles? We know markets have 5-year cycles roughly, give or take a year. It's not possible you can replicate this 90,000, 2 lakh crore, 2,50,000, 3 lakh crores coming year. Impossible. In fact, because of the tax losses which have been incurred and harvested, you're looking at a barren spell for the next 2 or 3 years. You will not make any LTCG or STCG. It's not possible. And on STT, given the fall in derivative volume, that's also going to have. Problem is that when you are looking at a very low number on these three big dominant parts of your revenue growth from personal tax, what happens to the growth numbers? Because capital gains, because your capex budgets of 11 lakh crores are then in jeopardy. The government is clear, it will meet 4.4% fiscal deficit. How do you meet it when you have a tax shortfall from this volatile source? You have to cut back on capex. Cut back on capex, you look at GDP growth numbers falling. I am very, very concerned about this whole stock marketification of our revenue inflows from the budget. And that to me is the single biggest risk to the markets from here on.
Nilesh Bhai, you serve on so many committees. I just want to introduce two of my colleagues who will be joining me in this questioning. Siddharth Zarabi, editor of Business Today. Shailendra Bhatnagar heads up Markets Today at Business Today. But Nilesh Bhai, you speak so often to those who matter in government. Is this something that you're talking to them about, the fact that FIIs are concerned about capital gains taxation, and if that was to be corrected or changed, that the likes of Samir Arora and Shankar Sharma feel could be the intervention that foreign investors are waiting for? But doing it outside the budget is also now quite uncommon. So how do you look at this debate that's playing itself out, and what do you think of it?
So while it is legitimate for FPIs to demand parity in India, which they are getting from other markets, but as Samir mentioned, if we deliver better return, then they don't mind paying taxes. And for all these years, we have delivered better return. So of course, one way to attract FPI is by giving them tax exemption, but that will be following the true Gujarati kehwat of Gharna Chokra Ghanti Chate ane Upadhyay ne Ato. The kids of the house does not have floor, and we are giving to the visitor. Why not focus on creating growth? Why not focus on creating governance, whereby we can increase the return? And FPIs are very patient investors. For 17 years, they haven't made any money in China. They are happily invested over there. So we have to focus on creating growth and governance so that the returns will be attractive for FPIs to invest.
From what I can see from Samir's reaction, he's itching to come in and respond to what you're saying. Bol do, jo dimag mein bata do.
I was saying I am 63. I now cannot wait 17 years for my return.
तो इसीलिए समीर भाई आप चाइना में इन्वेस्ट नहीं करते, आप इंडिया में करते हैं.
But I'm saying that is a bad
Samir Arora in China ना, इसीलिए समीर अरोरा चाइना में पैदा ही नहीं हो सकता.
Okay.
वो इंडिया में ही हो सकता है.
No. So the point, may I just summarize?
Yes.
So nobody is saying that you set off, a wave short-term capital gain, number one. Second is, in absolute amount, what Shankar was saying is right, but it is not going to be made this year. So let us not think today that somebody is giving up 1 lakh crores if they give up long-term capital gains. And next year also you're not making 1 lakh, because even if you last 4-5 years, the average is some 30,000-40,000, sure. And then in 1 year it's like big. So you are actually talking about $5 billion maybe on a sort of over a cycle. It is not a big deal to actually set it off for everybody, because that is what it was before 2018. And also, so it was quite okay at that time. And this also, remember, capital gains tax was removed in lieu of STT. So even from that angle, it's not a big deal. And I'm not saying I don't expect it to happen, but these are the kind of things that somebody should think if you want a sharper recovery and therefore moving on with life. Otherwise, it just takes time to rebuild, and okay, 2 years more will be wasted of everybody, and I will be still here, hopefully, but...
Okay, the next question is from my colleague Siddharth Zarabi. Siddharth.
Well, Rahul,
you know,
really...
but Rahul, Rahul, I have something to add to what Samir said. See, the problem is not that it's any rocket science to understand that we are an exceptional country by way of taxation. Like Samir, I invest globally. There is no capital gains I pay anywhere at all. I can only pay some moderate tax on dividends here and there. But there is no capital gains anywhere in the world that I invest in. Now, why are we so special that we are levying this? Okay, we are very special, except that. Now, the markets have told you, FIIs have told you that, look, the returns have fallen from 10-12% rupee return minus a 15% blended STCG LTCG, तो आपका आ गया वो 10% पे. वहां से आप reduce कर दो 4-5% currency, 5%. US 2-year treasury is yielding 4.2%. Why should I break my head over this country which thinks that some God gift to the world? So the point is that we are not special. We need to be in parity with the world, but we are not. But the point is the policy responses that we have seen is one of denial. We are not willing to accept that we have a problem. Till you accept it, there is no solution. The problem is only that, first of all, with some humility, we should accept that, okay, the FIIs are running away. There is something that we need to address. Let's go meet them. I tweeted a while back that we can criticize the previous regime a lot, but they were constantly talking to FIIs. I've seen them, roadshows in the US, roadshows in Boston, in Singapore, in Bombay, meeting FIIs, asking their concerns. Are we doing enough outreach to even understand what the problem is? That's what crisis management is all about. We have a crisis. Let's go out, meet them, get their feedback, and then frame policies without any. If you made a wrong thing, just rewind it. Like you take back things that you do for farmers. Farmer laws were rescinded and this and that. Why not for investors? Why we?
Nilesh bhai, do you want to respond to this? That the government seems to be in denial about the nature of the crisis, the extent of the crisis, and they're trying to portray sab changa si, whereas sab changa not si.
So Rahul bhai, total money taken by FPIs is about $37 billion. How much they have invested in India? The secondary market listed equity will be about $750 to $800 billion. The FDI is about $500 billion, including the levers and those companies. And the PE and venture capital is roughly about another $750, $800 billion. तो 800 प्लस 800 1600 प्लस 500 2100 2100 में से $37 बिलियन गया तो क्राइसिस तो नहीं कहेंगे हम. But at the same time, should we engage with them? Undoubtedly, yes. Why not? They are investors. They have given us their capital, and we must engage with them to figure out what is the best way forward.
Okay.
But at the same time, giving FPI a preferential treatment and local investors non-preferential treatment, then where will this end? आज टैक्स मांगे, कल बोलेंगे guaranteed return दीजिए. Samir bhai, let me speak, then you can comment. So then they will say, give me guaranteed return. Then they will say, IPO में हमें preferential treatment दे दीजिए. There is no end to it. We have to take money on our fundamentals, not on, concession.
Samir wants to respond very briefly.
I was only saying that nobody is saying seriously now that there is a tax that it be waived only for one group. Obviously, that will be very unrealistic. I'm saying the total amount is not a lot. But anyway, I think we should move on because this is not the thing. It's not happening.
Okay.
So why overanalyze something which is not happening? This has been going on since 2018, and I only in that conference just presented it because they asked me, what can government do? I said, this is what they can do.
Sure.
And I thought of it some 5 minutes before when they asked me, I'm going to ask you this.
Okay. So the next question is from my colleague Siddharth.
Rahul, frankly, this debate is being framed by some market participants on the lines of what happened when that retrospective tax amendment happened for Vodafone and its impact on FDI. Nilesh has, of course, put it in context with numbers. But broadly speaking, Nilesh, that question to you actually, beyond the numbers in terms of FPI pullouts, the fact remains that India is now a less attractive market for a host of factors vis-a-vis China, on the ground of currency, as well as domestic growth. Do you see some steps required to address those issues rather than the tax issue, which I personally think will not get rolled back?
Undoubtedly, Siddharth bhai, tax is like allopathic medicine. It will have quick results but side effects. Whereas we have to work like Ayurvedic medicine, a recovery without side effects. And the most important thing is freeing up, unburdening our entrepreneur. Today, ease of doing business is being implemented, but the pace at which it is implemented is very, very small, very, very slow. The number of compliance burden, regulatory burdens which are put on our entrepreneur is reflecting into private investment. How do we unburden our entrepreneurs so that they can compete with the best in the world? if we can improve ease of doing business and unburden our entrepreneur, growth can easily increase by 0.5% to 1%. For example, we have seen when the government companies comes in the end of public-private partnership model, their efficiency improve, whether it's Hindustan Zinc, whether it's Maruti Suzuki, whether it's Balco. Now, government officially states that we don't want to be in the business of running businesses. But the divestment numbers, despite last 5 years rally, has been well below target. So how do we improve ease of doing business, unlock the capital, improve the efficiency? That will attract FPIs over a longer period of time.
Okay, I'm going to get Shailendra Bhatnagar, our markets editor, to ask the next question. Shailendra.
Yeah, Rahul, I'd just like to make one point in response to what Shankar and Samir have been mentioning. You see, the reason why farm laws were taken back was because farmers get a vote, the FIIs don't. And I think the major issue in India is still overvaluation of this recently manufactured coffin of the bear market. Yes, the tax issue is one of the nails, but I don't think so. Taking away this tax issue, you will see markets rising anywhere soon. We were way overvalued over the last 5, 7, 10 months or so. Part of that correction is over. And as Nilesh Bhai would confirm, this is a flow-led sell-off. This has nothing to do with fundamentals, however weak they might be. Once the FII flow stops in terms of selling, you will probably see markets flatten out and then maybe start their upward climb or maybe upward trend.
Okay.
But
because we also seem to have here, Shankar Sharma, a situation where after a very long time, we're now seeing SIPs come down. So new people launching systematic investment plans, that number is coming down. And that seems quite alarming because the last several years, we've seen month after month, the SIP numbers go up. So what's your advice to those watching at this moment? Many of them are either A, pulling back or B, cutting down on their monthly investments. And that again is a self-fulfilling cycle. I mean, the more they pull back, the more the trend accentuates.
So look, I mean, stock markets this is the way the game works, right? And like I said that earlier, let them also suffer what we have suffered over 35 years. We have seen these kinds of situations. The newbies somehow believe that markets have stopped being cyclical. I've been lectured to by many small SME investors, told that you don't know anything about market. This time it's different. Then let them suffer. They will have cancellations of SIP stoppages.
Your ability to suffer is much more than the ability of small investors to suffer.
You see, we were also small at some point in time. We became big because we never cried. We went out, dealt with it, we overcame the odds. These people will need to also do the same thing. The bloodletting has to happen. It has just begun. It will take a while to be completely out of the system. I see no reason why anybody should be feeling sorry for the investors who piled in the last couple of years. They were coming at pretty much a very elevated level. They helped nothing but the FPIs get exits. I think 2022 was also a negative year, if I'm not mistaken, or 23. So it's not only that the negatives happened only in the last 4 months' time. They've had negative years even in the last 4 years of this amazing bull run. Let them, the new investors, also suffer the same pain that we went through. They will become better, if nothing else. Okay. So I think this is part of your market journey as an investor. Let's not feel sorry for them.
Samir, quick point on that. In the larger context, the post-COVID rally and a new equity culture, especially in freshers into the market that started, has that now come a full circle, according to you?
No, but before that, may I say that this is actually helping the newbies, not just in terms of education that they are getting from the market, but the fact is that if you are going to invest for 20, 30 years, you want the initial years to be low because you are accumulating at a fixed pace via an SIP. It is the other, you don't want that immediately you put the first 3, 4, 5 SIPs and suddenly the market is up 20% or whatever, and you are enjoying that on your 50,000 rupees, you made 10,000 rupees. But from there on, you have to invest and accumulate units at those levels. Actually, Shankar has not realized, but this is worse for people who are about to retire. People who were old, who might be thinking that they will get X amount in 3-6 months and now maybe getting, say, 15% less. So newbies are being taught a lesson, but not a very serious lesson. Actually, it is good for them.
Okay, Shailendra has a question. Shailendra.
Yeah, Samir bhai, this is a question aimed at you. You have about several thousand crore rupees invested via an AMC Helios in India, and of course, you also have an overseas fund. Now, what is the level of cash that you have as of now, and when do you start buying as far as the level of the markets is concerned? What would you buy, large caps, smalls, or mids?
So, right now we have some cash because we've taken a very confused view, I won't say negative view, on Indian IT. And the reason for that is twofold. And we had a lot of IT stocks. We had, not have. And the reason for that is A, the attack from AI is very, very serious. If you look at the 3 or 4 pillars of IT, one you can say is very easy, low in this thing, customer handling and BPO type. The second was coding. And today in an article in your online, this thing, the CEO of InMobi is quoted as saying that they have removed or are about to remove 60-80% of engineers, and in 1 year they would have removed 100% of the engineers. So the second is coding and the third is analytics. And in all of them, basically the attack is very serious. But the second thing is that in April, when these companies are supposed to guide, that will be 5-7 days after the deadline. So if in March they talk to the US clients and say, excuse me, can you please tell us how much orders we are getting? We don't expect the US companies to be able to say anything to our IT guys because they themselves are confused whether what their products will have, whether their input, raw material, everything. It's a total mess for this particular 2-3 month period. And because of this dual thing, we have a lot of cash. That cash is basically equal to the IT stocks that we had at the in December and Jan. Yeah.
So Nilesh bhai, last several years we've seen this trend that every month domestic institutional investors have more money to invest because retail investors are pumping in more money. They go out and they buy already overvalued stocks, and that's a cycle which kind of just kept fueling itself for the last couple of years. In previous cycles, we saw domestic investors being smarter than foreign investors. They knew when to get in, they knew when to get out better than foreign investors who in the Indian markets were oftentimes caught flat-footed. Now, my concern is from a retail investor's perspective, they've been pumping money in the religious belief that Nilesh Shah, Shankar Sharma, Samir Arora will find some way of making money for them. And now that belief is being questioned. So that's the challenge. This whole cycle of pumping in money which leads to valuations going up further, that's now being upturned. So you got a double whammy with the foreign investors having a negative outlook and these Indian investors who are very confident last several years suddenly getting rattled.
So Rahul bhai, I don't think so. We have gone and bought overvalued stocks. If that was the case, our fund should have fallen more than the benchmark index. Our fund should have delivered lower return than benchmark index. Like most foreign counterparts, and Samir bhai and Shankar bhai will say, most of the global fund managers underperform their benchmark indices. But over here, almost all fund managers have started outperforming benchmark indices in this fall. Because हमने तो घोड़ों पे बैठ ली थी, गधों पे ली नहीं थी. और एक समय ऐसा था कि गधे घोड़े से बहुत तेज दौड़ रहे थे. अब गधे गिर रहे हैं और घोड़े नहीं गिर रहे हैं तो फंड मैनेजर आउट परफॉर्मेंस दिखा रहे हैं. Volatility will be there. Rahul bhai, my small cap fund is up 5 times since 2020. Yes, it is down 20% from top, but it is 5 times up for a 5-year investor. So all I expect people to invest for long term, have moderated return expectation because whatever return came in last 5 years, those kind of returns are not expected in next 5 years. And even today in India, there is a market which has delivered better return than all the Amazons and Googles and Facebooks and Twitters and Teslas of the world. That's the SME IPO index. None of the mutual funds have gone and invested a single naya paisa there. Now one can criticize that we missed making money over there, but we are safe betting upon horses and not donkeys. Okay. So men's will be separated from boys. If investors have long-term view, and they can give patient capital, they will still make above inflation return in mutual funds SIP.
Okay, Shailendra has a question for Shankar Sharma.
Hi Shankar, Shail this side. Would you write off 2025 as a year of flat to negative returns for Indian markets? Consider the fact that 9 years of successive gains and the last 4 have been phenomenal.
Yeah, like I said, markets are cyclical. We've had a 5-year bull market. We are in the fifth year. I think in March 23rd, we will have the fifth anniversary of the bull market. When a bull market reaches fifth year birthday, it's close to the death day. So the bull market as it existed no longer exists. Now we are going to get a market which is going to be more trading oriented. We'll get sharp bear market rallies, huge ones. I mean, we can go back to 2008. It was not like a one-way down market. The 2001 bear market was again not. So we will get those rallies. But point to point, I don't see the indexes returning a lot of money from a displacement standpoint. In the middle, there'll be amazing places to make money in. I think also in the era, the lost decade of the 90s, we found some amazing companies. Dr. Reddy, the whole pharma boom was born then. The whole IT boom was born then. The HDFC banks of the world came into being. This will be the time when fund managers will need to be extremely hardworking because the days of easy money are over. They will need to be more bottom up, more picky rather than just bet on the macro. The macro doesn't look great. I mean, as I just said, I'm very concerned. But that doesn't mean in a country like India, you will not find micro. We are blessed to have 10,000 companies, good, bad, ugly. You will find enough to fill a portfolio. That's my way of looking at the next year or 2 years. But index basis, I don't see a lot of gains. In fact, I see negative gains.
Let's build on the Gada Ghoda analogy. I'll go to Samir Arora on this first. Samir, I don't want to speak particularly about one particular stock, but just broadly speaking, sectorally, which are the gadas, which are the ghodas at this moment?
No, I won't say gada because I used to own some of these 2 months ago. Right now, I feel that we have to, India has to somehow get through this IT issue because IT is not just a few stocks. It drives so many other things in terms of jobs, high-end jobs, middle-class jobs, consumer and all that. But IT is being attacked. That is what we are nervous about. But we have held it for 30 years in between, maybe not for a few years. They are in no way gadas. Actually, they are the best companies of India. But just too scary right now as to how they will deal with this in the, say, 3-6 months or particularly 3 months right now.
Okay, and the ghodas?
Ghodas, we've had the same old banks and all, which haven't particularly been ghodas, but they haven't fallen in this 2-3 month phase. And of course, they've been ghoda over the previous 23, 25 years or whatever, 26 years. And then last 2-3 years, they were waiting to do this, which is that not falling is now a big highlight of our life, that these banks have not fallen this year. Let's not...
No. So Samir, this reminds me of Hindustan Lever. In the whole bull market of 2003 to 2007, I don't think it moved by even 5 rupees.
And then it didn't fall in.
And then in the 2008 bear market, there's only, I think, one stock that was positive for the year. And it was up 5 rupees for that year. But that was Hindustan Lever. तो ऐसा ही होता है, जहां पर सबसे ज्यादा सुख मिलता है, दुख भी वहीं पर मिलने वाला है. That's the norm of the markets. So yeah, we are seeing the rebirth of them in the HDFC banks and the other financials. They didn't move up. So what room do they have on the downside?
Siddharth.
Nilesh, I just wanted a view on the public sector companies. They've seen a very, very significant market cap erosion in the past 6-7 months. Order book is pretty strong, but execution concerns remain. Within all that is happening, how do you view public sector enterprises?
So Siddharth, in public sector enterprises, there were many stocks where floating stock was very, very low. And because of limited floating stock, the valuations were sky high. Now those sky high valuations are finding that there is a gravitation also. But despite correction, I think they are still trading at a much higher valuation. I will advise caution over there. Rest of the market, where there is enough floating stock, so market price is discovered through market mechanism, through free market mechanism, there you have to take bottom-up stock calls. We still think there are segments of public sector enterprises like oil marketing companies which are very, very cheap. But there is always regulatory uncertainty and hence they may just remain cheap. As Samir Bhai mentioned, some of the PSU banks now looks good. Valuations are cheap, deposit franchise is strong, NPA pressure is limited. So in public sector enterprises, go on a bottom-up basis where you think there is valuation comfort. and there is limited policy uncertainty.
Rahul, just one of the key points that we need to keep in terms of overall market revival. I think our monsoon will be very critical. Second quarter of FY26, so around the festive season and thereafter is when many market participants, and I wonder what the views of Samir and Shankar are on that. How significant will the monsoon be in sort of helping reverse the momentum to some extent? Samir, maybe you want to come.
As long as monsoon does not lead to floods like happened last time, which led to the inability of government to spend on capex, infra, whatever. Otherwise, yeah, the base effect will work. I think anyway, just because of the way the markets are falling, either they will fall a little bit more this month, or they would have sort of been tired out. And then you need a little bit less volatility on Trump policies and maybe some visibility that things are over. So I think when April guidances also will start for IT and other sectors wherever they do give guidance, and then you can not say that suddenly the market will have a week.
Shankar,
but then you can move on in life. That's
Shankar, if I may just interject here and add one more element. By many accounts, the RBI was late in the rate cut cycle. Now, if it decides to catch up, will that also have a positive impact in your assessment?
No. I completely disagree that it was late to the rate cut decision. I know on social media, everybody keeps crying for rate cuts, but look at it logically. We have a very weak currency. On top of that, you're going to, and then you have, a large scale outflow of, and while Nilesh is right on the data front of a 35 billion or something, the private equity and the VC is not an en masse exit. They have no exit unless the FIIs give them the exit through the secondary and the primary markets. So it is not the quantum, but it's just the directional outflow of dollars that the RBI has had to defend. And I do believe the previous RBI governor spent a fair bit of forex reserves in defending the currency. It's futile against a rampaging dollar. We have a very weak currency. On top of that, you do a rate cut, you increase inflation, you decrease the currency. You are between a rock and a hard place. There is no room for a rate cut, which is why the new governor came in and just did a token 0.25. It is nothing. It doesn't do anything at all, because that was an admission that, guys, stop looking for hope or revival on this side. Look at the fiscal or something else, but this is not going to come from RBI or the monetary part of it.
And as we
very straightforward. No chance of a rate cut.
Come to the end of what's been a fascinating conversation. I have just one very quick round of questions. I want to go to Samir first on the issue of whether this threat of reciprocal tariffs has now been factored in. If and when they do get implemented, what impact do you see on Indian stock market participants?
No, it's not been factored in. Maybe at an aggregate level, yes. But, I think the issue of India having to cut basically tariffs to bring in, say, Tesla type, would actually, I think they should actively assist BYD and others to come in and compete with India. There is no need to protect 2 or 3 corporates in the whole of the country and let everybody else get old technology, buy outdated products or behind technology products to save 1 or 2 corporates. For example, is Maruti considered an Indian company or not? For most purposes, it is considered an Indian company, even though it is owned, and maybe those guys get some royalty and some dividends. But it's an Indian company. We should make all these multinational Indian companies by forcing them to go public in, say, 5 years, have a partner, have some localization requirement, have some export commitment. But all that is a negative for some existing guys if that happens. Otherwise, that broadly will not be a very serious thing. I think India will be better off than others in the reciprocal business, because I think the government seems to be willing to do a few deals here and there. And, for example, in the budget, they already cut tariff on whatever motorcycles, and then on these EV recently and all that. So that looks like they are willing to do it, because everybody knows, including the government, that some of our tariffs are just high for the heck of it. Why do we need 150% tax on bourbon or on whiskey, whatever? I mean, just for the heck of it. There's no real saving to anybody.
Siddharth.
I think what will fundamentally change, Rahul, just to take that point forward, is India now stepping on the gas with 3 trade agreements: the UK, the European Union, and the US engagement, for which Piyush Goyal is already on way. I think within the next 3 months, if all goes well, 3 to 6 months maybe, we will see concrete action. So 2025, while it being a year of tepid markets, could be a big bull year when it comes to trade engagement and new trade pacts, which haven't happened for 10, 11 years of the Modi government earlier, at least in this scale. And that will have a fundamental effect on Indian companies, including their profitability. Those who have benefited from a tariff moat will come under pressure. As the point was made, they'll have to sort of pull up their socks. But you would also see some amount of benefit from a consumption point of view. So 2025, in headline terms, is the year of trade.
Shankar Sharma, we're completely out of time. So one very quick last question. If you were, say, 20, 30 years before where you are right now in your investment journey, and you are planning where to invest in this market, what are you telling those who are watching you at this time, who are rattled, who are concerned? You've given them the life philosophical gyan ki humne bhi safar kiya, aap bhi safar karo. So outside of that, realistically speaking, where would you be suggesting to them that they should have their radars up for?
Very simple. Helios म्यूचुअल फंड में SIP करिए और कोटक म्यूचुअल फंड में करिए. बात खत्म हो गई ना, मतलब स्ट्रेट फॉरवर्ड.
और ये हमारे MFD नहीं है.
No. We can't have anything which ultimately needs to be edited out of the show. That's just said in jest, lest you think that they're being very jovial and friendly, but there's a lot of competitiveness and and vanity and pride as well about who does better in terms of the returns that they're able to deliver for themselves and for their investors. So take that with jest before you take that seriously. So Shankar Sharma, I know that you're a little unwell, but despite that, you took out time to join us. So thank you very much. Also, Nilesh Bhai for joining us on this broadcast, and Samir Arora for taking out time and joining us for this very special conversation I know will be heard and tracked very, very closely. So thank you. Since so many people were sending questions that we should do a discussion and debate on the news track, bring it front and center, and that's exactly what we did. I don't know whether you've got the answers, but we'll just have some clarity about how the big market operators are thinking about the current situation in the market.